Hey, everybody. Happy Thursday. Oops. Happy holidays. Happy all the things. Why is my screen not going where I want it to? Guys, no big deal, but I was early. For those of you that are here, for the few of you that come live and join me live, usually I'm a couple minutes late every time because something gives me a glitch. And today we're here. We're on time. I'm excited. However, normally I jump right into it and I get started, but today I am going to ramble for a few minutes to give people time to log in because we did get tons of RSVPs to join live. And because it's a Q&A session, I want to give everyone the opportunity to jump in here and put in their questions. So yes, I am ready. I am ready for the holidays, guys. The holiday season is my favorite, from Halloween through New Year's. I am here for it. I have been so, in a good way, unusually busy though this December that it does not feel like Christmas here. Not just with work, but with the family, all the things. So I cannot wait. I'm trying so hard to get all of the client-facing work done by tomorrow so that, because my kids are out tomorrow, so that after, starting Monday, I can shorten my work days for the 2-week holiday break and really be present. So excited to hopefully do that. So today is a Q&A session. Throughout the session, I will remind you, if you're live, to put your questions in the chat. I do have a decent list of questions that came in through our chat or through Facebook and everything, for people that I'm guessing couldn't make it live. So hopefully if you submitted your question, I'm able to get to it today. I am going to try to get to all of them. I will do my best. But if you are here live or you do join live, you have priority. So please enter your questions into the chat. Otherwise, I do want to get started with BOI, okay? Business Ownership Information Reporting. We've heard about this all year, all right? If you haven't heard of it, just a brief kind of step back, right? So BOI reporting is something new that they came up with in 2024. It's where we as small business owners have to register with FinCEN, which is the financial, I only call it FinCEN. It's part of the government that really what their job is to find money laundering, okay, and dirty money and track that. And so the government decided, so big companies, right, already have a lot of reporting requirements, right? Especially if they're publicly traded or they're just, large businesses, they already have to report and stay compliant with certain regulations, right? Small businesses don't. So the government's like, hey, we're going to implement this new BOI reporting, business ownership information. And we're going to require each business to tell us about their owners, and then each year update if things change in ownership or they move or anything like that. The whole point of this is, though, they can try and find dirty money. Me and all my colleagues' thoughts on this is, if people are doing shady stuff, they're not going to file this BOI anyway, okay? So throughout the whole year, we were told if your business was in existence before January 1st, you had until December 31st of this year to file it, 2024. But from the beginning, me and my colleagues all had a feeling that this would be deemed unconstitutional and go away. All right, kept not happening. So, September, October, November, we start kind of advising on it, telling people, how to fill it out, where to go, how easy it is, all that stuff. And then, no joke, the week before I was supposed to do BOI training here with you guys, they put a hold on it. So a Texas court deemed it unconstitutional. The question I'm getting now is it just Texas people that don't have to file, or is it everybody? And as of right now, it's everybody, okay? As of right now, BOI reporting requirement has been suspended. All right. So what is your job? What do you have to do? If you already reported it and you already filled out your BOI, great, super, nothing to do. If you have not yet filled out your BOI, just keep an eye on this news. Okay, keep an eye on here. My friend Jamie Troll, she is so good at putting updates out there on Facebook and YouTube. Because while I am very, 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 very confident that they will not overturn this temporary suspension in the next 13 days, they could. Technically, they could. But will they? I can't even fathom a world where this happens because government's already trying, they're already shutting down for the holiday. When government's in, here's my bias, they don't do anything anyways, though they're in. So yeah. So they're not, I don't believe they're going to do anything that would require us to all of a sudden on December 30th panic and start filing our BOIs. All right. And in all honesty, I think this goes away under the new administration that is very, pro keeping your privacy private and, lack of invasion of privacy. Like, they dislike invasion of privacy. I don't see this coming back, but it's something we will keep an eye on because technically this Texas ruling is temporary. Okay. So that's what I have on BOI reporting. So now Q&A. So for those of you joining, I see a couple of you hopping on. If you have questions, stick them in the chat. I do want to make sure if you show up live that your questions are priority. I do have a nice long laundry list of questions to answer. So that is what I will jump into. And then after each question, I'll just peek back at the chat and see if we have anything to answer there. All right. So I didn't do my normal who am I? So sorry, I just jumped into BOI reporting. But if you're here, I'm guessing you know. Hi, I'm Bree Beers. So we're just gonna roll, okay? All right. Oh my God, I have so many questions. Okay. I should have put these in order of like how I wanted to answer them, but it's fine. I'm going to try to go easiest to hardest so I can fit the most in. All right. So one person asked, how long should I keep tax records? All right. That is a great question. So for tax records, you should always keep your tax returns, your supporting documents for at least 3 years. All right. You hear 3 years, but we want you to retain them for 7 because 7 years is the threshold for when the IRS can audit you. Okay. So you want to keep your tax returns and all of your supporting document for 7 years. If you own a building or any sort of asset, you want to keep the documents related to that for as long as you hold the asset, because you just never know if you go under audit or anything, how far back they're going to want to go to see those records. Okay. But 7 years is our general rule for how long you want to keep those tax records. All right. Another question we got in. Ooh, this is a great one. What should I do if I owe taxes but can't pay immediately? This is such a great one, you guys. This is a great question because we see taxpayers, right? Who whether they come in or we're talking to them on the street, doesn't matter. But there's taxpayers out there who know they owe money, right? They do not know how much because they haven't done their tax return yet, but they know they're going to owe money. And so many people are like, I'm going to owe money. I don't have the money to pay this tax liability right now, so I'm not going to file my taxes yet. That is not the right answer, right? And let's talk about why. All right. So there are different penalties that the IRS has, okay? There are underpayment penalties, there are failure to file penalties, there are failure to pay penalties, late payment penalties, and interest runs the gamut, all right? But the failure to file penalty is the steepest, okay? Failure to file is 5% per month, up to 25% of what you owe, okay? And so what we always tell people at the very least, okay, those tax deadlines, and we'll talk about those because I have other questions I think about tax deadlines. So April 15th, right, is the one we all are like, okay, got to file our taxes by April 15th, all right? and you're that client that's like, I'm not filing my taxes on April 15th because I don't have money to pay my tax bill. No, 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 no. Very least, the very, very least you should be doing is filing an extension. Okay. If at any time, for whatever reason, you cannot file your return by the April 15th deadline or the March 15th deadline, if you have an S Corp or a partnership, all right, get that extension filed. Okay. Extensions cost no money to file. And it gives you an extra 6 months to file your return and avoid that failure to file penalty, which again, the failure to file penalty is the steepest at 5% a year, up to 25% of what you owe. All right. And if you have an S Corp that files an 1120S or a partnership that files a 1065, the failure to file is even steeper. Okay. So at the very least, you should be filing an extension, even if you can't pay in a dime. Get that extension filed if you cannot file by April 15th. Okay. Second, like a step up from that would be to file that extension and pay in what you can. Even if you have no idea how much you owe, even if you're like, I'm going to owe $10,000 and I have $1,000, pay that $1,000. Okay. So by filing the extension, you avoid the failure to file 5%. By paying anything, you are going to decrease or minimize your failure to pay. All right. There's a failure to pay penalty as well, which is, I think it's 0.05%. Don't quote me on that. I don't have that memorized. But it is less than the failure to file, but there is still a failure to pay penalty. So if you can pay in anything by April 15th, you will minimize that penalty as well as the interest that goes with it. All right. And so let's say you file your return, doesn't matter whether it's April 15th or you extend and it's all the way at October 15th. At any point, you get your return prepared. All right. And you owe money and you cannot pay that money. All right. We have clients who we will prepare it in April and then, they've disappeared and we're like, what? We have your return done, let us finish it. Let us finish it. And they're like, well, I can't pay. And I'm like, okay, here's what we want to do in that case. All right. You don't want to put off filing if you can't pay. All right. Because again, the failure to file, if you're not filing even an extension, we'll go but guys, if you file, your return will be right. The IRS has it. And then what can happen is you can go on a payment plan. Okay. And payment plans, they are still going to accrue interest, which is much less than any penalties. Okay. And depending on the payment plan and the term of the payment plan, you might still have some penalties, but you're going to minimize those penalties. All right, with the payment plan. The other nice thing about a payment plan is there are lots of activities that we do out there as Americans that require us to timely file our tax return. And if we file our tax return, but get put on a payment plan, we'll still be compliant with those regulations. Okay. So this is very common. So in the tax world, tax accountants we have to file our returns on time. All right. In lots of professions, it's weird, but that is a requirement. Even I can't remember, but we have clients who are in certain industries that they have to have timely filed returns. But they're like, but I can't because I can't pay. You can file with that and then set up a payment plan. Okay, with that IRS. So that was a great question. The next step to that is if it's a huge amount and like you're never going to be able to pay it, you can enlist these services of an accountant or maybe a tax attorney as well does this, but offers and compromise. And those are ways to, that's when you owe a large amount of money and you are considered insolvent. Let's say you owe $25,000 and you're like, there's no way in heck I'm ever going to be able to have $25,000 to pay you. Oftentimes you can have your accountant or lawyer, tax lawyer, do what's called an offer and compromise and say, hey, I know I owe $25,000. I have 10 and I'm willing to pay that all to you now if you'll write off the rest of this. And there's different things that go into an offer and compromise, but I just want you guys to know that is an option. It is not something you should do on your own. It is absolutely something you should be engaging a professional to do for you. Okay, but it is an offer that is there. All right. Another good one. How do I decide whether to itemize or take the standard deduction? Okay, so this is one. So the standard deduction goes up each year. All right. It increases for inflation. I believe this year, 2024, it was $14,600 if you're single, double that if you're married filing jointly. In 2025, it'll be $15,000. Single, $30,000 if you're married filing jointly. All right. In order to itemize, your itemized deductions, which I'll go over the brief list here in a second, have to be above and beyond that standard deduction in order for you to benefit from it. Okay, so let's start with what are those itemized expenses that we are allowed to deduct on Schedule A if we choose to itemize instead of take the standard deduction. All right, that is our mortgage interest on our primary residence. It is state and local taxes, but only up to $10,000 total. That $10,000 cap is something that was enacted or came about in 2017 under the Tax Cuts and Jobs Act. All right, we used to be able to take state and income tax up to whatever we paid, which for my California, my Texas, my New York people, that number can be huge, right? And with the Tax Cuts and Jobs Act, it limits that tax portion to $10,000. And what else? Charitable donations, right? So those cash and non-cash charitable donations are lumped into this Schedule A itemized deduction. We also talk about medical expenses, but medical expenses have yet another limit on them, and it's that there is a floor to medical expenses. What does that mean? What that means is if I have $100,000 of what's called our AGI, or adjusted gross income, okay, my medical expenses up to 7.5%, so $7,500, those are not deductible, right? Above and beyond 7.5% would be able to be itemized on my Schedule A and go toward that itemized deduction amount. All right, so when you add up your mortgage interest, your state and local taxes, your charitable donations, and your medical expenses exceeding 7.5% of your AGI, if that is above $15,000 in 2025 or $30,000 if you're married filing jointly, you're going to want to have either TurboTax, H&R Block, or your accountant itemize because you will get a bigger benefit. The nice thing, you guys, about using a tax advisor or a tax professional is that they'll optimize that for you. Okay, they will take all of your itemized deductions, they'll stick it in, and if it's not above the standard deduction, they'll take the standard deduction, right? And if it is, the other nice thing, if you have a good tax professional, is that they'll help you fill in the gaps. All right. So they'll say, oh, last year you had a mortgage interest statement. This year I don't see it. Do you have that this year? Whereas if you're just self-preparing, a lot of times you may miss things like that. All right. I'm going to peek. Okay, I see people kind of coming and going. If you're joining, welcome. If you have any tax, accounting, bookkeeping, I'm not very good bookkeeper, guys. Tax or accounting questions, please stick them in the chat. I am going to the list of questions that came in throughout the week through our chats, through our chat function on Facebook. But if you have your own questions and you're here, please ask them away. Ask away. All right. Let's see. Sorry, I'm looking through the questions. If you guys have been here since the beginning, I said I'm going to try to bust out the easy ones or the quick ones first, and then get into some of the more. But I think I answered the quick ones. Okay. So another question I got is what are some common tax deductions available for me as a business owner? All right. This is kind of an in-depth one. So let me see if I can summarize, okay? So when we have a business, all right, the tax code is built for business owners, okay? And when I say business owners, I mean anyone who has a Schedule C, a Schedule E, or a separate partnership, corporate, or S corp return. All right. A lot of times people hear business owners get tax breaks and they think you have to be like that has to be your main thing, right? It can be a side hustle, it can be your side gig, it can be your hobby that you turn into a business. That is the opening, that is the door that opens for you to start utilizing the tax code. Okay? And we tend to perceive that the tax code was built for the rich, okay, and that only the rich can take advantage of it. But here's the thing. Rich people have the resources, they have the team, they have the money to utilize the tax code to its fullest. But our tax code does not explicitly exclude or like only include the rich, right? It's not like you have to make a certain amount of money in order to take advantage of many of these tax codes. Most of them are written around if you have a business, here's a deduction or here's an opportunity for you. All right. And so that starts with expenses. And if you've been around with me before, you know that when we talk about tax planning, we talk about the first step is taking money that you're already spending and turning those dollars from post-tax dollars to pre-tax dollars. And what do I mean by that? I mean the money that you are spending on your mortgage or your rent or your vehicle, on food, on travel, on supplies in the house, all of those things. If you don't have a business, you're using post-tax dollars, right? You're using money that you earn from your W-2 job, likely, right? That has already been taxed. It's in your personal bank account, and now you're using that money to pay for these things. So what we do is when we have this vehicle of a business, even a small side hustle Schedule C business, or a rent in real estate or rental investment business, we now open the doors to take some of those post-tax dollars that are going out of our bank account, out of our personal bank account, and move them into pre-tax dollars that are coming out of our business account. What do I mean by that? So we talk about like our tier one tax strategies include making sure you're maximizing your home office deduction and your business use of your vehicle, right? So you're using your vehicle, right? Make sure it's being considered a business expense, so it's pre-tax dollars. If you have a home office, right, you're going to be able to take a small percentage, but a percentage nonetheless of your household expenses, meaning your mortgage interest, your rent, your HOA, your utilities, your water. If you have a housekeeper that cleans your whole house, including your home office, you can take a piece of that. Those are the big ones. All right. And even if you guys, let's say $10,000, you spend $10,000 a year on all of those things I just named on your house. And we decide that we calculate that your home office is 10% of your house, right? Let's say you have an apartment, it's a 1,000 square foot apartment. If you're not new here, I like easy numbers. Okay. 1,000 square foot apartment. You have a second bedroom. It's a 10 by 10. So it's a 10 by 10. So it's 100 square feet. So it's 10% of your house. All right. So we get to take 10% of those expenses and deduct them as a business expense. Okay. That's $1,000. $1,000 deduction. Okay. What does that mean to you? It means if you're in the 22% tax bracket, which is the most common, it's a $220 tax savings for you. All right. Just by doing a few calculations and a little bit of record keeping. Other things. So your household, your business use of your vehicle. What was the original question? What are some common tax deductions? Oh, I went into tax strategies. It's fine. I'll circle back to tax deductions. But this is how do we turn post-tax dollars into pre-tax dollars? Hiring your kids is a fantastic one, you guys. If you have kids, specifically if you have kids between the age of 7 and 17, this is a huge tax break and tax strategy for you to take those post-tax dollars and if you are like me and you are paying for a club or club sports or piano lessons or anything like that, you can find things in your in your business for your kids to do for you, pay them, and then take a portion of their earnings and put it toward those club dues or those piano lessons or whatever. Okay. So great strategy. If you are a small business owner of any capacity and you do not have your kids working in your business, let's go. Get that going. Another great one is the Augusta rule. Right? The Augusta rule allows you as a homeowner, you do have to be a homeowner, all right, but it allows you as a homeowner to rent your house out to your business we typically advise for leadership functions, right? And if I'm the only person, me, then I am the leadership team. But it's a way for you personally to invoice your business for use of your house. Your business gets to take the deduction as rent expense, and you as the homeowner can do this for up to 14 calendar days a year per calendar year, tax-free. There's a rule. It's called I don't know what it's really called, but we call it the Augusta rule or the master's rule that says you can rent out your primary house up to 14 days a year, and that income is excluded from your taxable income. Why? I don't really know. I can nerd out and tell you that the whole reason that came about was because of the Masters, the golf tournament down in Augusta, Georgia. People that live down there, they rent out their house for exorbitant amounts of money compared to what they pay for them. They peace out for 2 weeks, go on vacation. They collect a nice little paycheck for the time they rented their house out. That money is tax-free. So we can help you, or you can, as a business owner, utilize the Augusta rule to do some income shifting as well. All right, but let's go back to the original question, which was, what are some common tax deductions? Okay, and it's anything any money you are spending that is for the purpose of your business is going to be a business expense. All right. The IRS defines a business expense as something that's ordinary and what's the language they use? Ordinary and necessary. But that is something I tell you guys, don't get hung up on that. All right. And if you're not sure, ask. All right. Don't ask TikTok, ask your tax advisor. If you don't have a tax advisor, that's what these sessions are for. Okay. So I'm going to tell you that if you have rent for office space, that's a tax deduction. Salaries and benefits paid to employees, business related travel. Travel is a huge fun one, you guys. I've done a training in the past on how to maximize travel expense. Check that out. It's one of my favorite. All right. If you do not have travel expense on your business tax return, you are not doing, there's an opportunity there for you. Okay. Depreciation on business assets, like your vehicle, if you have equipment in your business, right? You can take a depreciation expense on that. Marketing and advertising, professional services, any consulting fees, legal fees. The one that I get questions a lot are continuing education. Like I want to take this class, or I want to take this course on marketing for my business. Those are tax deductions for your business, you guys. Like, yeah, absolutely. So what I tell people is don't go just spend money to spend money, right? But if you're looking at money you're already spending, is there something you can do to turn that money from a personal expense to a business expense? The biggest way to think about it is meals, right? When we're going meals, business meals is a legit business expense, okay? It's limited to 50% of your cost, but it's there, okay? It's available to you. So when I'm going out to eat, I'm thinking, is there a way to make this a business expense? All right. And a lot of times, so my husband's a realtor, and a lot of times he will go out, and maybe he'll go out for drinks, he'll go out to hang out, maybe he'll go out to dinner, and it will turn into a business meeting because as he's out having drinks with friends, someone comes up and is like, hey, I'm thinking about buying a house. Can I pick your brain at some point? And Travis like, I'm free now. You want to go grab a bite to eat? Sure. They go have a meal. Maybe they have a drink. That just became a business expense. Okay. I have time for one more. Let's find a good one. I don't know. They're all good. They're all good. Okay. I kind of touched on this at the beginning, but it's a nice, easy one to end on. And it's, what is the deadline for filing my 2024 tax return. All right. So deadlines for filing income tax returns, April 15th. If you are, that is your individual tax return, right? That's when your individual tax return is done, your 1040. All right. And if you are a sole proprietor or a single member LLC, or you have real estate investments, then your business activity is all reported within your personal return. Okay. So even your businesses are due April 15th. If you are a C Corp, your C Corp return is also due April 15th. However, if you have a partnership or an S Corp, all right, so a separate business tax return. Partnership, if you're in business with one or more people, you default to a partnership. S Corp is a tax election you can make, whether you're a partnership, a single member LLC, or a C Corp, you can elect to be taxed as an S Corp. And so if you're a partnership or an S Corp, your tax return is due March 15th. If for any reason you cannot file your returns by those days, all right, file an extension. It gives you 6 more months to file. Okay. All right. Time is up. I want to tell you guys, so remember, or maybe this is not a reminder, maybe this is a news flash. I'm out the next 2 weeks. Okay. There will be no lives the December the 27th or Thursday, December 27th or Thursday, December 26th or Thursday, January 2nd, right? Holiday break, I'm out. We will come back on Thursday, January 9th, same time, same place. And we will do another Q&A because there were a number of questions I did not come back to, or I wasn't able to get in. That'll give you guys an opportunity to submit more questions if you'd like. All right. If we have an update on the BOI by then, I'll include that as well. So we will do a Q&A on January 9th. And then the following week, we'll get back into actual training sessions. But that said, let me know what you guys want to learn about. All right, next year. What do you want me teaching on? Let me know because I will be putting that schedule together over the break. Yeah, so that is it for me, you guys. Have a great holiday season, no matter what you celebrate. Enjoy your time, hopefully with family. I know for some people, this is a very hard time of the year. So if that is you, my thoughts are with you and love you guys. Thanks for being here. Bye.